But our next guest remains bullish, saying that Nike's size and its scale gives it a competitive edge over its peers in the long run and expects investors to buy it on weakness. So joining me now for more on that story is Simeon Siegel, senior retail and e-commerce analyst at BMO Capital Markets. Simeon, this is a big deal. I mean, this is a Dow component. It's Nike. It's one of the biggest brand names in the world, and it's just shed over 10% of its value in one day. Why should investors buy the dip?
Good to see you, Dom. That sounds very, very Grinchish. So listen, I think everything you just said is fact. But what's interesting is if you draw that stock chart out a month, you'll see we're flat. And so I think we should not ignore the fact that right now what Nike has done, and to be fair, the market and my group in general is up a lot, but to think that we're down the most in 26 years, but we're also flat to 3 weeks ago, I think is an important point of context. And so what I thought was really interesting last night, listen, I get the stock being down today, that we should not ignore that. But what I thought was interesting, I think there's three distinctions we have to make. I think we have to make the distinction between what they actually did last quarter versus what they guided to. Last quarter the quarter they reported was great. Where they guided is what's taking the fear, what's taking the shares down. I think the second thing we have to do is revenues versus profits. And this is a big conversation because Nike historically has been let's grow, let's grow, let's grow. The revenues are the disappointing point people are talking about. Operating profit dollars was up 15%. That is a big number, especially for a company with Nike's size. They're making more money. So I think that's number two. And then number three goes back to kind of all the points before this, the segment right before. It's the change in multiple versus the change in numbers here, I think is worth putting into context. And so asking our question, saying the stock has run a lot. It's now given you a little bit of a breather room because they're telling you things are going to be more concerning go forward, which is Nike's par for the course. And now we have to just recalibrate and say, okay, where do we go from here? I think from here we go up.
Speaking of recalibrate, that's what Nike is doing, or that's what it says it's going to do in the coming years with its cost structure. They've announced restructurings that are trying to save about $2 billion worth of costs over the next few years. Take us through what exactly that plays out like in your models, and why would Nike take these steps if in the longer term they still feel as though that growth picture is intact? Or is there now a recalibration of what the street should expect for Nike's growth prospects, given they're acknowledging their costs are maybe a little bit more aggressive than what they thought they should be?
So the answer to that's probably yes on all fronts. It's not normal that you hear of a $2 billion cost cut that in the same sentence they say, but we're looking to reinvest those savings to fuel growth. So normally this is a very different restructuring. Normally restructurings are, we have a problem, we need to fix it. Let's do that, and then we'll go from there. This one sounded like, to your point, we need to just move things around so that we can take those dollars and allocate them to growth. But I think your question makes a lot of sense, whether that's the right thing, whenever you do a restructuring. Unfortunately, this is obviously going to involve people. And so when you're restructuring people, when you're restructuring lives, does it make sense to immediately flip those dollars around and grow? Or should you analyze why we are where we got here? You and I have had this conversation around this D2C. I mean, my team published the report, D2C is not all it's cracked up to be, and we believe that. I think we're seeing it. I think the same way that I just said, there's a distinction between revenue and profit. And now finally, Nike, we're seeing maybe the revenue falter a little bit and the profits are exploding in a good way. That wasn't the case last year. Last year, when we saw these huge revenue beats, sometimes they were followed by dollar declines when it came to the profits. And so I'm hoping that this restructuring is an acknowledgement that we need to drive this business in a healthy way. And so we do need to move some things around. They believe, there is no question they believe they are still a growth business, even at this revenue scale. But generally, that does take some time. What I think, as I get comforted for the stock, ultimately the stock numbers have to be driven by the bottom line. Nike doesn't trade on a revenue on multiple, it trades on profitability. And so what you and I need to see is we need to see that those profit dollars going up. And I think that's where we're going based on what we saw last night.